Ladies and gentlemen, welcome back. Let's head on to the next session of the day entitled The Regulators Bootcamp. Moderating this session is Ruslena Ramli, the head of FinTech and Islamic Digital Economy, Malaysia Digital Economy Corporation, MDEC. Ruslena's financial expertise transcends across credit ratings, capital markets, commercial and retail banking. Her key strength lies in the structuring of Sharia-compliant financing deals and development of Sharia-based banking and capital market products. Therefore, I pass it over to you, Ruslena.
Salam sejahtera and a warm welcome to all participants joining from across the globe. My name is Ruslena and I'm pleased to moderate today's session with the stellar lineup of our speakers today. We have Puan Mala, Deputy Director of Financial Development and Innovation from Negara. Welcome. Ms. Azrina Azmil, Deputy General Manager, Digital Strategy and Innovations from SE. Ms. Suwan, Partner, Wong and Partners, and also Association Member of FinTech Association of Malaysia. And our thorn among our roses today, Mr. Saiki, Vice President of MBCA. Welcome, welcome everybody. So today's panel session will cover some flashback to showcase how Malaysia has grown remarkably over the years, latest trends, innovations, guidelines that have come up over the last few years in pushing through our digital transformation. The views from our regulators, FinTech Association and our venture capital will bring us up to speed on where Malaysia now in our chart in our roadmap forward in driving disruptive technologies and solutions. So without further ado, I would like to ask the first question to Puan Mala. In terms of Malaysia's first advocator for FinTech, starting with the FTEG and the sandbox regulation, has the FinTech industry progressed in line with the get-go vision that we've had?
Thanks, Lina. Let me start by thanking the organizer for inviting me. It's a pleasure to be here. So back to the question. Yes, Negara has long been a strong believer in the positive power of technology and innovation. And when we launched the FinTech Regulatory Sandbox in 2016, we wanted to send a stronger signal to the industry of our openness to innovation and FinTech. So the vision here is to inculcate innovation in the industry and leverage FinTech to address the remaining gap in financial inclusion, especially for the unserved and the underserved, with better quality and more affordable products and services. Of course, we also expect FinTech to bring efficiency gains for our FIs in terms of how they conduct their business, how they can serve their customers better, and how they can manage their risk more effectively. In terms of progress, we are definitely seeing more innovative dynamism in the industry. As you all know, we have more FinTech players in the market today. And we have our regulators deploying new technologies such as eKYC, AI and data analytics. And there is also this growing sophistication in FinTech, the application of FinTech in financial services. And we observe this firsthand in our sandbox. In the early days, the application revolved mainly around e-wallets and financial product aggregators, but more recently we have applications. We have seen more sophisticated business models such as digital insurance and P2P takaful business models. So I would say it is an evolution. It is a journey, and there is scope to bring our FinTech industry to the next level through appropriate support and capacity building.
Okay, so from 2016, where we first launched our regulatory sandbox, so there were a few candidates, and those candidates, 8 years from now has actually done tremendous in terms of building the momentum and getting to where they are now. How do you see the level of progress from the time that we launched the framework and to the respective fintech companies that has grown remarkably over the years?
You mean the sandbox participants?
Yes, the sandbox
Are you
participants.
referring?
Sorry.
Yes. So I have to say that those who were in the sandbox most have graduated successfully, and a few actually managed to secure proper license, from Negara. So I think the benefits of sandbox in general, whether is intended or not, is provide some kind of a rubber stamp, for investors to somehow the fintech those participating in the sandbox, they manage to secure funding and thriving. I'm not sure if I should mention, but a few names we have, Money Match,
Yes.
and World Remit, they are all have managed to secure license from Bank Negara. So yeah, so I think they are doing pretty well.
Yes, and I like to also say that MDEC was part of their successful journey as well. And together with MDEC, we launched the FinTech Booster in August 2020. A little bit of feedback again from Puan Mala, please, in terms of how that has also done well in helping the pain points in the industry, which was the key objective in having that platform.
Yeah. FinTech Booster came into being partly as a result of our observations of the sandbox, where we found that many of the applicants, the FinTech startups, came to us with inadequate understanding on how our regulations may apply to them. So we found that almost around 60% actually of the sandbox applications face no regulatory impediment. So this indicates that they do not understand, how our regulations might apply to them. So, and also over 40% actually lacks operational readiness, in fact, to go live. So MDEC similarly corroborated these gaps, and to address some of these gaps, we decided to work together and develop a capacity building program for fintech startups, which we know today as the FinTech Booster. Under FinTech Booster, fintech startups can take advantage of free one-on-one consultation or public sessions from participating booster partners, the legal consulting firms and Shariah advisors. And I think over 900 people have benefited from this program. Lina, you may want to correct me if I'm wrong, since you are, the main organizer here. But yeah, so under the first pillar, I understand that the focus of the booster is very much on legal and compliance, but there is plan to expand the program to provide other forms of support, such as business models and technology. So whether the overall objectives have been met, I'm not sure if I'm allowed to say on behalf of MDEC here, but I think we are only just getting started with FinTech Booster. So the big idea here is for FinTech Booster to be the go-to platform for fintechs and incumbents, alike, as well as the rest in the ecosystem, both public and private, to connect and collaborate. So we do hope that more will come on board, to support the booster programs, whether you are a technology company, Sharia advisors, legal consulting firms, government agencies, and so on.
Well
So I
said.
think
Well said, Malawati. I mean, it pretty much gives a sum up in terms of the success of how the first pillar has actually launched. And yes, we have had good seminars and also participation from applicants in pushing through Malaysia's digital agenda. So on the topic of guidelines and also accelerator, SCA also has played a phenomenal role in making strides as a key supporter for Malaysia's FinTech. So Puan Azrina, if you could, touch on the latest guidelines that has been released over the years, and also your efforts, SCE, in helping to build that momentum as we chart our growth story forward.
Okay, thanks, Lena. A very relevant topic for this fora that we are, participating in. So for the SC, I think our first kind of digital journey started back in 2014, 2015, because in 2015 we issued the first regulatory framework to facilitate crowdfunding, right? Equity crowdfunding. And 2016 is the P2P framework, correct? And followed by, digital investment management, which is our robo-advisor version in Malaysia. And then, of course, digital assets started to be regulated back in 2019, right? So before I even talk about, this latest guideline, which is the guidelines on digital assets, maybe allow me to take a moment to perhaps provide the genesis behind the issuance of all this regulatory framework governing digital assets. Everybody's talking about digital assets. So really, I think 2016, 2018, a lot of interest. You can see the evolution and also growth in this digital asset segment, right? And also when you look, when you take that back to Malaysia, there has always been growing interest among issuers and also investors in this new asset class, right? Which necessitate the SC to kind of facilitate or formulate regulations around this area, right? Why? Because we need to kind of ensure that we can enable innovation, but at the same time manage the risk associated with such innovation, right? So when you talk about innovation, digital assets can be used by businesses to raise funding, right? To raise financing. So you issue digital tokens. But at the same time, digital assets can be used as an investment instrument, meaning if people want to buy, want to trade in digital assets, and there should be a platform to facilitate it, right? So you have to look at it from the lens of the investors, you have to look at it from the lens of the businesses, right? So with that, 2019, we prescribed digital assets as securities, so it falls within our regulation. So the first guidelines that facilitated the trading, which is a secondary market, right? So this is so that people appreciate what is DEX, what is IEO, because it's new terms, people get it confused all the time. It's a bootcamp, right? It's a regulatory bootcamp. Perhaps this is the time for me to really try to dispel some of the confusion surrounding this digital asset, which everybody's like, talking about, right? So, okay, it started with, people want to buy Bitcoin, things like that, right? So it is, you're talking about digital tokens that are already in circulation, right? Yeah. Since the height of the global financial crisis and things like that. So we wanted to facilitate that, and it is through our recognized market framework. That means we need to have an market operator that can be able that are able to do this, to facilitate those kind of trading, but within some form of regulatory parameters, right? So digital asset exchange DEX is an operator which facilitates the secondary trading of digital assets. That means you want to buy and sell, you can go through this exchange, right? But then we have to look at businesses as well who want to issue new tokens to facilitate fundraising, right? And that is governed by the, let's say, GODA, Guidelines of Digital Assets, right? This is where it is a primary market kind of activity, right? You're raising fund, you're minting new tokens, right? And how do you do it? You have to go through a process called the IEO process, and that process is governed by the guidelines on digital assets. So two things, right? DEX, IEO. And what is IEO? IEO is initial exchange offering, meaning that for entrepreneurs who have innovative business models or business projects, and they want to issue a digital token on a through using blockchain technology, they have to actually submit that proposal through an IEO process. Then you have the IEO operators who would actually assess these proposals, right? So the vetting and everything would be done by the IEO operators. So when you heard about the fact that the SE opened up applications to who would like to become this IEO operator, that is the process that we are currently going through, right? People say, what's happening? How many applications? So with respect to that, I think at the moment we are entering into the finalization of the stages of assessment. We will be announcing who are the successful IEO operators in due course, so that in the future, if there are people or businesses who do want to go through this IEO process, which is the fundraising process, then they will have to go through the IEO operator that is registered by the SC. So I hope that is clear. IEO is in a way like an investment, not an investment banker, but they actually assess those.
Yes.
They undertake due diligence on the business proposal, on the white paper that has been submitted. Whereas DEX is more like kind of a exchange, like Bursa, but you firstly buy and sell of digital assets that is already in circulation, right? So if you want to talk about the latest progress in relation to DEX, like those operating that secondary market of digital assets, we have 4 so far. The first DEX was started to be live, I think, 4th quarter 2019, and recently we had the 4th DEX, right? So 4 DEX operator, 4 digital exchanges so far. In terms of trading volume and value, I think we saw an uptick 2021, especially Q1, Q2. There was a lot of new account openings by investors, by people wanting to invest, and I think in that Q1, Q2 2021, more than 300,000 account opening by investors, just to show that there is this strong interest in signing up into wanting to buy digital assets. And what sort of digital assets can you buy from these exchanges? We've got 5 so far: Bitcoin, Ethereum, Ripple, Litecoin, and the latest is Bitcoin Cash, right? So we've got 5 of these assets that are able to be traded. And often they all ask, why just 5, right? We never stop each of the DEX from coming to the SC to apply for new assets to be traded, but that needs to comply with the requirements that we have set up in the recognized market guidelines, right? We have to ask about, how do you maintain liquidity? How much of these coins can you stock up? How do you run an order book? Things like that to ensure that you can facilitate trade on that kind of exchange. So I hope that kind of provides some clarity as to why you go through an IEO process. You want to fundraise. Why do you go to DEX? Because you want to buy and sell, right? Bitcoin. And usually the tokens that are being added into DEX is very much tokens that have already been in circulation, right? And you can actually look at how many of the tokens are in circulation and those liquidity requirements that we ask for. So that's about DEX, latest guidelines and all that. So recently, I think a lot of you are aware that the SC had launched a FICRA, which is really an Islamic FinTech accelerator that is aimed to kind of provide that collaborative platform for startups to be connected to the regulators, industry partners, mentors, UNCDF experts, and also potential funders. And these kind of solutions that we want to see more of are solutions that aim to bring depth into the ICM products, right? So there are 3 challenge areas that we have put forward, which is 1, we want to see new types of ICM offerings, right? 2, even though we have those kind of offerings in the market, we want to ensure that there are more access being created, so that more and more people are able to invest in this range of ICM products. And 3rd is, how do you integrate all this with Islamic social finance, right? That is very, very dear to the heart of a lot of people, especially nowadays with the impact of pandemic, and it has affected a lot of vulnerable segments in society. And a lot of people want to actually allocate those funds to help these people, but there are not many platforms that provide that seamless kind of journey for a person who has funds but wanting to allocate those funds efficiently to those in need, right? And they want transparency. So this is why that 3 challenge areas were crafted, and we have invited applications to come in. We have.
What is the current status?
It's overwhelming. Yeah, we closed the application back in July, but because it's so overwhelming, because they give a lot of value propositions from different angle, right? Even if you talk about social finance, Islamic social finance, it can be propositioned in a different way, right? Case in point, some people use it as a way to channel even donation through Kad Hasan, to ensure that that donation money is channeled to the people in need, but it comes back and it can be rechanneled to other things, right? It's not just a one-off donation. So they took donation, make it like a marketplace where they use Kad Hasan to deploy those channels to people in need. There are also solutions that aim to be the ecosystem player to strengthen the innovation ecosystem within the ICM, for example. If you talk about vulnerable segments in need of financing, but they're not getting the financing that they need because of lack of data, so solutions that aim to provide those kind or capture those kind of data so that these entrepreneurs are able to have some sort of background or track record for them to get into more formal sources of funding. That's something that we want to see. If there are people who want to get into this area, want to ensure that, okay, these are the vulnerable segments, what are the challenges that they need? They start capturing that data. That data is useful for other sources of funding or financing to come and use, right? And we want to see more of that happening. We also see the fact that you take the lens of a like a Muslim individual, right? You want to ensure that you have end-to-end kind of Sharia transaction to help you go through your life journey, right? And it starts for first time you gave birth this beautiful baby, and say, oh my God, I need to kind of ensure that they have the funds they need to pursue their education, whatever in the future. Right? It's very, very much that for me, if my daughter can earn herself for her own education, by all means, I'm going to facilitate that. But as a parent, you always want to find, if you have that ability to find ways to try to give some form of a nest or why for them to grow and be independent in the future. So you try to chart that, right? And yes, if there is a platform. Yeah, if there is a platform that facilitates the kind of cradle to tomb journey, meaning that even as you grow up and as you as a parent invest, say, more in digital assets or other asset securities, you want to be able to also channel the kind of integrated in that lifestyle platform, say like a digital will that is able to kind of complete, right, the whole process. Yeah. So that is the kind of facilitation or solution that we see coming in, trying to cater to the different pain points or needs of the life or the journey of an investor or person, right? So we see that. We see people who really fall within our regulatory framework. We see ecosystem players who are key, players who are key in ensuring that there is this efficient fundraising process or investment process. So that was, interesting. Yeah. So that's the part. I think I answered most of your questions. Sorry, I'm taking too much time.
No, I love the energy that's coming up from SC.
Because I'm so, when I saw, wow, I see the solutions, right? So it's very heartening that we have talented people out there. Yeah.
Okay, and so if I could, sum up some of the things that Azrina was raised, and also with Puan Mala was, the guidelines are there, the support from the SCN are there, we're seeing innovative solutions in coming up with management of the problem statements that are in the industry. So if I can hear from the voice of the FinTech Association in Malaysia, Suwan, over to you.
Thanks, Lena. Thanks, Puan Mala and Azrina. I've actually looked at the FI sector for many years, right? And I saw the shift. I'll be frank with you, and I saw the shift. In the years when I first started practice, going to see the SC and going to see Bank Negara and getting feedback was, it's a lot more. I hate to say it, but speak to the hand sort of feedback and vibe, But I saw the change because I saw the sandbox approach that central bank moved forward with. SC, of course, took a different perspective of it, right? It's not a sandbox approach, but it's having affinity, as emblazoned on Azrina's t-shirt this morning, right? The regulators have taken a different approach, right? In the last 5-6 years, definitely, right? They are more open to hearing and more open to engaging. Pre-pandemic, as I've mentioned to Puan Mala and Azrina in the past, right? Bank Negara hosted regulatory bootcamps of the sort of nature that you're running right now, Lena. But it was like very and together with the SC. And I've attended those, right? It's targeted topics to try and raise awareness, right? Amongst participants in the industry, the FinTech players, so that they actually understand what's regulated and what's not regulated, right? And I'll be honest with you, the FinTech members were very, very excited about those events. And you could see it from the turnouts at all those events. Right, it's near full house. I mean, we've had a couple at MDEC's, offices at Central.
Yes.
Right, where it's that co-working space, and you see it fill out, right? And in the pre-pandemic days, we could all turn up, we could all speak and hear directly from the regulator and ask questions. That is something the industry has always wanted and welcome very much, right? And I'll give you a couple of examples where we as an association have worked together to have engagements, right? For example, I think, Puan Mala, you will remember you had My FinTech Week, the first inaugural one. We had a session, right? A roundtable between the association and central bank so that our participants and members could directly raise questions, raise concerns with you, right? We're happy to be the channel. We're happy to try and help you funnel the questions, group them, right? So that you're able to, see where the pressure points are from FinTech players' perspective. But our members have always wanted to hear directly from the regulators. We will always want to support that. Right. We've also had the eKYC engagement session with your team members pre-pandemic days. And I know, Azrina, the affinity team has had, all sorts of engagement with affinity members in respect of, in fact, the IEO set of guidelines when it was exposure draft, because I attended some of those sessions, right? We see a lot of that pre-pandemic. It may seem to have tapered off during the times of the pandemic, because I think everyone's busy switching gears, trying to recalibrate to find a new normal. But what what the association would like is obviously more of such sessions to continue, right? Because it has to be a two-way dialogue, right? We can help you to the extent that we can in terms of, some of the contributions that we're looking at this coming year is, finally putting together our directory around fintech players. So regulators can always come to us, if you're looking at, who's out there in the market, right? We'll have a repository, right? But we also want to work together with you to bring members' concerns up to you.
Yeah.
I hear you around, Fin.
Suad, if you could also add, as you're building this playbook of yours for the fintech, if there were any challenges that was funneled to you, how you go about in facilitating the process in your engagement with the regulators.
Yeah. So in terms of that, we're seeing members come to us with various concerns, simply because, and I'll be frank, right? Some regulations are drafted very broadly, and it is drafted in a sweeping manner. And I can give you examples, right? For example, in terms of the definition of remittance, anyone who facilitates the transfer of funds, right? That's a remittance business. And of course, if you do it often enough, it's a business that's licensable, right? The sort of questions some of our players have for us is that they are a platform operator, a provider of a service, and of course, they sit in between, right? Whether they sit in between the merchant acquirers and the merchants as well as the issuing bank, right? Sitting in between all of that, is that a remittance sort of license requirement? And the reality, and the reason why I raise this is because regulations are drafted broadly for a particular purpose, and I get that, right? But on the ground, where we have issues around for our members is they can't open bank accounts, right? Because the banks act as the gatekeeper. The banks are saying, oh, you're doing that as your business, as part of AML KYC onboarding, right? Oh, isn't that remittance? Compliance will not allow us to open the bank account for you unless we see a remittance license, right? Then the question that we then have to funnel through is, do we go to the regulator and have that discussion with them around what to do? Am I subject to licensing, right? So those are some of the pain points that we see. And what we need to work out going forward is where there are similar sort of issues, is there a sort of guidance that we can get? Is there a platform where we can engage with the regulator to reach somewhat of a balance?
FinTech Booster is the platform to go.
Correct. Exactly. Right. So, but we need FinTech Booster to be more well known by the participants. And this is where we can help you, right? To ensure that that's that channel, and that, we work together to try and bring a lot more awareness to the participants that there is that avenue, right? And if you grow that avenue beyond legal and compliance, it becomes a more attractive proposition as well. And it becomes your one-stop shop, right? I will help you look at it from, business planning perspective as well, give you guidance and a steer around it. So we need to work together because we're all part of one ecosystem, right? We'll never be able to do it on our own, right? Because then you get a siloed approach with verticals, right? Yes. So I think that's going to be important. I know, Azrina spoke a lot about Islamic finance and how some of the initiatives that DSC is driving there. We know INSEF is also having a similar initiative. I Connect FinTech in Islamic finance. I think that's what INSEF is looking at. They've reached out to us, the association, to see how we can work together with them. At this stage, it's really, grants made for R&D, and you need to partner with local universities. We're speaking very closely with them when they get to the next stage, right? Where it expands to a little bit more, where we can bring in some of our members who are focused in Islamic FinTech.
That's a
Yes.
wonderful initiative, and we look forward to working together.
Yes.
We'll bring in the SC, the big guns. And finally, of course, is money. So as
It's
you know,
most important.
the most important key. So as we move forward in terms of building business development, market access, all of it will not be able to happen without support from venture capitalists, grants. So Saiki, over to you. Your inputs, please. And how has Malaysia grown? Please add also in your remarks, how has Malaysia grown with regards to the progressive thinking and ensuring that there is support in terms of the funding throughout the ecosystem, from startups to mid all the way to IPOs.
Right. Thanks for having me. Morning, everyone. I think first and foremost, I would like to kind of comment that, you know, Malaysia, based on what I have seen, right, our country has been really at the forefront of, you know, adopting a pretty progressive and straightforward, easy to follow regulatory regime. So I think, well, it's a really fine balance, right, between, you know, having to safeguard the public interest and the financial stability while not having, you know, balancing the taking a bit of a prudent stance not to stifle innovation. So there's always this fine balance. I think we have done pretty well in the sense that, well, let's quote one example, right? P2P lending. We have seen in the past many years ago, you know, a catastrophic, you know, failure, right, coming from the China side, you know, with well, collapse after collapse, right? One example, Izubao, one of the largest P2P, it was really a 38 billion renminbi kind of scam, right, going through. And when the Chinese government clamped down, then the whole actors within those sectors went over to Indonesia and had another run. And so I think we have taken that approach, and so far whatever that we have done in the P2P segment over here has been pretty regularized and it's growing quite healthily, right? So I think in terms of what I think maybe the participants of the industry could work a bit more closer with the regulators is something that I also learned from studying this P2P episode, right? Whereby even in China, in Indonesia, the associations of the country has been working very closely with the regulator, you know, just like what Suwan was saying. But I think they went ahead with a slightly more, one more step ahead, in the sense that they were talking about some kind of a self-regulatory regime, you know, setting up the code of conduct. And I think they were even talking about, you know, dispute management and whatnot, right? So that certainly, if it warrants that sort of a collaboration between the participants in the industry and the regulators, it certainly will eliminate some of the resources that is needed by the regulators, you know, to go through this whole process. Because after all, there is a bigger pot of water that they need to take care of as well, right? Now, touching on the funding side for FinTech, well, first and foremost, you know, looking at the local VCPE ecosystem, there's still a huge room to grow.
Yes.
Yeah, Malaysia on its own hasn't really got the depth and breadth yet, right? And we're making some progress, but there's a lot more headroom for us to get into a stage where we could be self-sustained. Now, particularly then zooming into the FinTech side of things, you know, the funding intervention is still pretty much needed, especially FinTech, where things are activities are somewhat regulated, whether through licensing kind of regime, permission, or registration, right? The issue now is that, you know, there seems to be a lack of early stage, pre-seed and seed stage money in the market, right? Because a lot of later stage, they can certainly rely on, you know, funds that are a bit more regional in focus. They really love Malaysia in terms of the visibility of, you know, our regulation and all that. very similar to our neighboring country. But then again, having to invest in a very early stage company, there has to be some form of a heavy lifting by the local who understands the local regime, the local regulation rules, and how to navigate, right? And what so that's one other aspect. In terms of perhaps another one that I want to touch on is what's the wish list by some of the fintech startups, founders, right? Is perhaps a bit more open API from the financial institution. We have had some kind of a guidelines or whatnot, because I think with more open API data sharing with opt-in or consent from consumers, it will certainly propel a lot more innovations coming in. But our current stance is that we haven't really made it mandatory of any sort, mostly voluntary, right? So well, hopefully we can have a predefined target or whatnot, just like online or paperless digital payment, kind of milestones. Over time, we probably will prepare the incumbents to get a bit more comfortable. Give them a head start, and then later on, be a bit more open. Then we can create a bit more innovation coming in.
Okay, if I can just interject, just going back on the pain points for funding for startups, can I just listen from our regulators, Azrina and Pamala, a little feedback in terms of, because I know this has been an ongoing issue, and we continue to try and see how we want to address this. So I would appreciate some feedback from both of you, please. Wamala, do you want to go first?
I think I will leave it to Azrina to address the funding ecosystem for businesses.
I think part of the reason why we had ECF and P2P was very much that, even over the years, we've seen the VCs even targeting more later stage because less risky, more established, and there is that gap of in relation to supply of high risk financing. So if Saiki, if you can correct me, usually if you're an entrepreneur, the first kind of pot of gold that you want to go for is your 3 Fs lah, friends, family, and ... They're not really fools lah, but then what happens after that, right? So you need to kind of socialize what you have or the business to a bigger audience, and that's why we had that ability for private companies to come on a platform that is regulated by us to seek for funding. And this is what we want to say, smart capital, in a sense that people they know that it is really patient capital, right? It's not like something you put in, especially in the equity crowdfunding space, and you can get something next month, right? You're in there for the long term, right? But if it's in relation business or the product that you feel strongly about, right, you are okay to put in that money to be part of that business expansion that the entrepreneur will go through. So more and more we see people coming to this space, right? And the beauty of this is that there is no one size fit all funding. Sometimes the platform does kind of tailor-made the investment agreements so that it's even sometimes you can actually get some guaranteed dividends, through some preference shares kind of structure or things like that. So innovations in terms of the kind of structuring the right agreement does kick in depending on the business that you are raising funds. So we see that at first, if I looked at my operators, they came to me, Azrina, people think that I'm just asking for free money, but it's something altogether. They say, you need tak ada otak ke? You don't know how to get funds. That is the kind of things that they get, right? But they have gone through this journey and they have become established players. And to me, I'm heartened to see that these entrepreneurs have that lease of life, like ability to raise, right? And sometimes if you compare to the bigger funding ecosystem, what the banks are putting in, the percentage could be small, right? But if you look behind those numbers, right, if you look at the founders, the entrepreneurs, right, that small money is huge to them. And that is where I feel, well, I want to see more of that, right? Sakit, you nail it on the head. We need to ensure that that early stage funding ecosystem is strengthened and it's competitive enough for them to grow to the next level, so that they get the funding from, you know, the normal banks, you know, even PEs, you know, who goes for more brownfield, not greenfield kind of so and that is why we have actually raised the limit, you know, from first, I think 5 million lifetime, 5 million, 10 million, now 20 million, you know, with, you can actually seek funding from the public, your private company, or, you know, now we've allowed for unlisted public company to even come in from the public, right? So these are the kind of behaviors that we want to inculcate among even businesses who are not yet listed, but they are governed by disclosures. They are governed by the need to engage with their shareholders, right? And the pandemic has shown that, right? What happens to high touch business and raise financing through ECF? So they did that, right? So same with, you know, and hopefully a follow-on funding from VCs, right? All right. I understand sometimes, you know, when I ask entrepreneurs, you know, why you're not seeking for local business, sometimes it's the size of the fund, you know, sometimes it's not big enough to take them through several rounds of funding. They have to sign, you know, very intricate investment agreement. Sometimes there's conversion clause, you know, sometimes there's a lot of things in there, right? But if they want to go through the process, they want to make sure that the process is, it does balance it out, right? It does allow them to get the fund that they need to go through that several rounds. So I think this is an engagement that has to be facilitated, you know, with the VC industries, PE industry, and also the other ecosystem player, angel investors, even corporate investors. Maybe corporate investors need to come in and help early stage as well, right? And also, I think there is a need for us to also look at investors from a different lens. Maybe it's not that maybe in the past where we just say you're sophisticated, you know, your Schedule 6 and 7, this is what the products we require. Retail, this is what we require. But even among the retails, there are retail investors that are more educated in terms of being savvy, right? Maybe we can give some allowance for these people to be able to invest in more sophisticated products, right? From what we've, so that for the regulators, we are also trying to understand who are our investors, and for the players, be it VC, PE, or be it ECF, P2P, and on all capital market players, they need to also evolve and listen to the needs of their consumers or investors or investors or the business that needs. There is no one size fit all. There is a need for us to be innovative to provide the funding that they need. Yeah.
Certainly. I think on that front, you know, I think MVCA would probably have a dialogue with SE also.
Yeah,
so if you talk about the definition of accredited, you know, investors, you know, probably to look into how we could actually loosen it a little bit, especially for guys who are seemingly very sophisticated, and yet they might not fulfill, you know, that threshold that is being set at the moment, and that will really open up the market for an access, you know, by our startup to well, professionals who are qualified. And also, really, I'm really following the digital asset exchange with keen interest, in the sense that, you know, it will provide an avenue to really close the loop. Yeah, we already have done really remarkable job in terms of attracting, you know, retail and private investors into startups through ECFs and all that. I think this will actually be able to actually help to answer, you know, the elephant in the room, right? Exit. Where are they going to go? So with this kind of loop, hopefully, you know, we see some good outcome, and that will even, you know, cultivate more confidence in terms of this asset class, privately held companies. So that is something that I'm following very closely as well.
Okay, great. And MDEC will be happy to be part of this roundtable dialogue session as well in looking at how we can further facilitate funding for our tech and tech companies. Just going back to the cue from Azrina on her word that says balancing. So, and it's the title of today's session, Regulation Bootcamp. So there is this sweet spot between regulation and innovation. You know, industry people say that over-regulation may stunt product development and impact future growth. So if I can hear from the industry voices first, and then we'll move to the regulation. What is that balancing act or sweet spot between regulation and market innovation? Saiki, since you're still online.
Yeah. Okay. I think like what I kind of alluded to, right? Maybe if there's opportunity, a self-regulatory regime might help a little bit in terms of speeding things up, right? But then again, you know, at the end of the day, I still kind of support the idea that intervention will have to come in when the risk, you know, become a lot more apparent and whatnot, and that certainly has to be there. So I think what I've seen at the moment is already quite interesting and sufficient to me, right? Because well, for example, when the public interest is involved from day one, example deposit, then we have the digital banking, you know, regime, of course, in terms of serving the underserved or whatnot, but the public interest element is so important. Hence, you know, that the guideline has to come in, the regulation has to come in, right? So, well, I'm looking forward to the next phase. You know, I heard from the industry that okay, digital insurance and Takaful is coming, right, after the banking. So I think really it is what we have seen now is, I think we are addressing the gaps, right, as we go. And I think for now, whatever that we're doing is okay, right? There's already enough of guidelines or regulations, and more importantly, I think our regulators are really maintaining a really open door kind of policy and all that with MDEC and all. There's enough avenue for any upstart to engage with the ecosystem and all the actors within the ecosystem. So, well, I think at the end of the day, innovation is important, but the financial stability is also has to be there at the forefront. You know, otherwise we will have a really chaotic environment as well.
Good. Suan?
It's spot on, right? At the end of the day, what we're looking at is proportionate regulation, right? Regulation cannot be the one that will stifle innovation, right? So there needs to be a balance between, you know, regulating those that, you know, will pose a systemic risk versus regulation taking a lighter touch, right? And it will all boil down to this, right? What is the business model? What is that new business proposition that is being brought to the market, and whether it warrants a licensing regime or an approval regime, right? And giving that model sufficient runway to see the development before we then scale up and tighten the screws around regulation. The public needs to be protected. That's a given. But it's a function of timing, right? And when the more specific and detailed guidelines around regulation is issued. And the hope for the association is always this, and which is what the regulators have been doing, right? An exposure draft, a draft that comes out to allow participants or interested stakeholders to foreshadow what is around the corner and to give feedback. That I think is what's going to be key, right? So that you maintain that balance to allow innovation, but yet it is subject to some level of regulatory scrutiny.
Okay, so I think that our regulators here, the happiness level from the industry to say that your support is there. What more can be done? Over to you, Wan Mala.
Thanks, Lina. Yes, actually, I think many in the industry might already be familiar with Bank Negara's approach and philosophy in regulating innovation. Our thinking of well-designed regulations is actually guided by three principles. First is parity, where we will strive to create level playing field for both incumbents and new market players. Where I think fundamentally we will, when it comes to similar activities or risk, will be treated similarly across the different type of players. So that's one. And second is proportionality, as what Suwan just mentioned. So we do recognize that the rigor and intensity of our regulations must be proportionate to the risk involved. So our regulations do take into account the size and complexity of businesses. And last but not least is neutrality. So we are technology agnostic. So we are open to the use of different technological tools, systems, and approaches. So in practice, this means integrating all these considerations into the way our regulations are written. And you can take our digital bank licensing framework as an example. The foundational phase under the framework actually provides simplified proportional requirements. So this will accord digital banks some time to scale up, to a reasonable level before they actually become subject to full requirements and compete with traditional banks on equal footing. And as what Suwan alluded to, actually also in the it is a common process for regulators, Bank Negara, and I'm sure SC as well, to actually have that period of exposure draft where we consult the public, and the industry to comment on our papers, our new regulations, as it is being drafted. So that is the process already. So as a regulator, actually, I really like to think that regulations and innovations can be mutually reinforcing rather than competing priorities. The point of regulations, I believe, is not to hinder progress and innovation. As you can see over the years, our financial systems has evolved, but so too have our regulations. But we have learned in the past that innovation without stability actually destroys value. So well-designed regulations must seek to ensure that innovations enter our market safely, while innovators should proactively consider regulations from the get-go, rather than perceiving it as a constraint. So that to me is a sweet spot.
Fantastic. Azrina?
Oh, I like to go last because everybody covered everything that I wanted to say. But I suppose innovations, I think innovation for innovation's sake is something that sometimes I find hard to grapple with. What we want to encourage is actually responsible innovation, right? And as regulators, striking that delicate balance in terms of facilitating innovation, also ensuring that investor protect is really a difficult task. And I feel like it's a no-win situation for us. Like if you're if we're too lax, then something happen, we get it as well. But for the SC, I think what we've done and we will continue to do is really proportionality of regulation, meaning that regulations will be imposed in a graduated scale, right, in line with the growth of the market and also the complexity of the product. So you can see that for market operators like ECF P2P is a registered framework. For Bursa, it's an approval framework, right? Approval from minister as well, right? So that there is that spectrum that you can come in, you are lax, but when something goes wrong, you can come in and stop it. Like Sakit mentioned, what happened in China. Innovations if you want it to be sustainable, if you're in for the long game, you have to talk to the regulators, because you're not going to last. If sometimes, if the regulators come in and just, crack down on your operations, that's it, right? So, engage with us early. I mean, we're never there to stop innovations. We want to ensure that the marketplace, we want to ensure businesses are able to raise financing. We want to ensure investors are able to invest in the assets that they need, right? But they need to know what they are investing in. And that's where disclosures are key. That's where we feel that whenever the operators did something wrong, we can have a hold on them. So this is why regulations, I mean, we don't want to stifle it. There's always no more regulation than necessary, punya principle, right? So we want to achieve that. It's not an easy task. It's always a learning process, even for the regulators to go through this. But with the data that we collect, with whatever parameters that we've put around an innovation, we can make a decision whether to liberalize or to make it more strict. I think that is key. Data-driven evidence to ensure that the regulations become better, more efficient in trying to reach that objective of innovation.
And if I can further add as well, this proactive engagements that the regulators, ASEAN and also Negara have done over the years, from our capital market master plan, from our VBI intermediation, our SRI framework, almost all the white papers that have gone out have always been a proactive engagement with industry players in terms of how we can collaborate and work together in terms of effective implementation of the strategies and policies. And I think that's key, as well as everyone work together in ensuring that stability, the innovation takes place, and also the risk management is well protected in terms of everyone's interests. I'm taking cognizance of the time, so I have vested interest as head of BDA. So my last question is going to be on Islamic finance. So you all know that the economy is envisaged to grow to about $3.5 trillion by 2025, and Malaysia, as a global leader, can leverage on this. So I would like to get views from my panelists. How do you see the landscape in terms of Islamic FinTech over the next 2 to 3 years? Maybe we'll have Suwan first.
Thanks for that, Lina. I think you're spot on, right? We're a hub for Islamic financing, right? And in terms of where I see it go, or rather where I would hope for it to go, is really not the tail wagging the dog, as I would call it. We see a lot of products and a lot of solutions right now which are being offered, right, or being brought to market more from a conventional sort of perspective, right? It's always conventional sort of perspective driven, and then after that, it then gets converted or it gets modified such that it becomes as well an Islamic product or a service offering. What I want and hope to see, right, is the other way around, where it is the Islamic angle, right, and providing a solution that is, in that sense, ethical investing or ethically compliant product, driving that first, right, and the conventional guys hop along with it. So that is where I hope we will get to, and because we've got the people, we've got the expertise, really. If you're looking at Sharia advisors, you're looking at Sharia councils, the principles, all that, it's there, right? And what we want is to have the innovation come together, right? Using the sort of available expertise, available resource for them, given the FICRA, the accelerator program that Azrina talked about. It sounds as though there are solutions coming from that sort of angle, right? And clearly a good place to start thinking about is really the ESG component, right? That is something which a lot of businesses are taking seriously, right? If you're able to merge that together as an offering, that will really make a difference. I hope it jives with some of the applications that's gone in to figure out, because that's where I would like to see it go. Lena, you're on mute.
Sorry. And Saki, your inputs, and if you could also add, there was this industry perception that it's an Islamic fintech is going to be harder compared to a conventional fintech. Can you dispel that rumor?
I think at the end of the day, it's about how to you see, a lot of times the struggle is about how to kind of have the investment objective and the return profile and whatnot being reflected and in compliance of the principle of Sharia, right? Well, I think what personally I've seen, right, is pretty. I think it's also the good work of Suwan. Yeah, I think before we had a discussion of one example that I got fascinated with is that there is already a good pool of examples or precedents, that we have seen where there is no direct conflict between VC investment, what they expect out of the portfolio company, right? If we could have a way to structure the investment terms and whatnot in compliance with the Sharia laws. So, well, I think that's already quite feasible, right? I perhaps, also like to share that, as a exco of MDEC, we did have one discussion about this segment, because at the end of the day, if we talk about, Islamic digital economy, it really involves enablement of product sold or services delivered through digital means, right? So e-commerce being one of the key elements. I think it's probably about time for us for the industry, VCPE, to think about how we could actually have capital to basically propel the growth of Islamic products and services, be it food, apparel, or even investment products. And then from there, the fintech will come in overlaying it, because of the growing economic activities, you will then give rise to the need for access to capital, payments, trade finance, working capital, or even technology to enable traceability, which is one key element of halal industry, right? So all these are already in place. I think what we'd like to see is perhaps the MVCA in the future will actually attract a lot more participants in this industry by looking at the product and services itself.
Okay, great. Azrina, I won't allow you to go last.
Okay, so a lot has been said, and I agree with what Suwan mentioned. I think it's time for us to come out with unique solutions that really was given birth by the needs of the Islamic finance community, rather than we copy from the conventional. But maybe it's time for the conventional to copy from us, because it's really a solution that address the pain points that is unique to the Islamic finance community. But as a capital market regulator, I think what Malaysia needs is an investment ecosystem that is diversified, so one that caters to the needs of all types of businesses and individuals. When you bring that halal bit inside, halal economy inside, then you cannot run away from looking at the growing Muslim population, the adherence of ethical values that will impact consumption, right? That's key, because now when you are in the capital market, you have to think about all these changing preferences, be it from the business front and also the investor front, right? So this is where solution can take place, right? And one strong area is really the halal economy, right? It plays a critical growth, and it does contribute to the success of our MSMEs as well. They are the backbone. of our industry, right? If we don't help them come up with if you don't facilitate them in getting the right kind of access to the right kind of Sharia compliant financing, then we fail, right? We want to ensure that there is this end-to-end Sharia compliant ecosystem. So this is where we feel that it's time for us to help them, especially during now pandemic. The 1.5 years has been very difficult for them, and they have been hit the most, right? If it is about finding the right capital market solutions to help them get out from their predicament, the time is now. We need to do that, right? Because they are our backbone of our economy. Yeah.
Ramala?
Yeah, thanks Lina for letting me go last. Everything has been said by my fellow panelists, but yeah, it was nicely said, by Suwan mentioned about the need for our Islamic finance and Islamic FinTech to go even more strongly into ESG and sustainability. And I think some of you are probably aware that for the banking sector, we have been advocating the value-based intermediation framework, so where sustainability and ESG actually features as a key driving force, along with this whole idea of on the need for Islamic finance to develop genuine products that is not driven from the sort of a copy of the conventional. So this angle is actually going to be featured heavily in our new financial sector master plan and financial sector blueprint. And also another element that Azrina just mentioned is within the sphere of Islamic digital economy, definitely FinTech can do more to explore the vast potential of the halal sector. Couldn't agree more. Particularly with the continued importance of global trade and the need for end-to-end Sharia compliant solutions for the halal sector. So there's scope for FinTech to address the various pain points, such as digitalizing trade finance solutions and integrating across the value chain of halal businesses to example, to improve the efficiency and address the information asymmetry. So yeah, we do think that this is an exciting space with many developments in store for us.
Okay.
Lina, can I just add something? I think I'll be remiss if I didn't mention this. Recently, I think my colleagues from ICM, they've worked hard on this. They've introduced this toolkit, Sharia toolkit, whereby private companies and even alternative market-based financing platforms can use this methodology to help them offer more Sharia compliant investment notes or equities in the private market. So that's, I think, is key to driving more in the private space. Sorry.
It's okay. So if I could just recap, I'm pleased to acknowledge that there has been a proactive engagement continue in terms of how everybody is working together to ensure stability, to ensure that innovation and technologies continue to be at the forefront in driving Malaysia's digital economy. So my last note, I would like to thank all my panelists today for the wonderful engagement session and your experiences. And MDEC hope to continue to be part of this ecosystem story in further showcasing Malaysia's success stories to the world and bring our ranking up. In terms of Islamic FinTech, we're already #1 according to the Global FinTech Report. On the Findexable, we are ranked number 37. We've improved up 11 spots, and we hope to eventually move up the ladder, and collectively together, with the regulators, the support from our funders, the FinTech Association, I truly believe we can get there. So thank you again, Puan Azrina, Mala, Saikid, and also Suwan. Thank you so much.
Thanks, Lena, and thanks, MDEC, for the opportunity.
Thanks, Lina.
Thanks for having me.
Okay, take care, everybody. Stay safe.
You too.
Bye.
Thank you, Ruslena and our panel members for that informative discussion among the regulators and experts from the FinTech fraternity. I totally agree with what Suwan and the others said about the relevance of the integration of the ESG best practices with FinTech and Islamic FinTech. Thank you again, everyone. We'll now be moving forward to our next session of the day, and it will begin very shortly. Do click join session and please complete the survey for each session for us to continuously serve you better. Okay, see you in a bit.